welcome to your Monday Futures Market Outlook for March 14th, 2011. This is Patrick Ceresna. For those of you that have not had the opportunity to try out eMiniSource.com's trading room, 5-day complimentary memberships are available on the website. As always, we start off with a weekly chart of the S&P 500 going back 3 decades, and we plot an 80-week moving average on there. Does a very good job to depict the bull and bear market cycles over those years. When we in 2010, when we crossed over that, we've remained bullish for well over a year now. At this juncture, we've worked our way up towards around the 1340 level on the upside of the S&P, where we were looking for short-term highs to actually come in. At this stage, we do believe we are going to see some form of a profit-taking cycle that may have the market drop as much as 10% on the downside. That doesn't necessarily make us bearish in terms of a new bear market on this go-around. I mean, more than likely, it may emerge as a buying opportunity when it does occur, but simply at this stage, we don't believe that there's much upside on the market until the market comes back and consolidates. When we take a closer look at the S&P 500 on the daily charts using those futures contracts, one thing we're seeing here is already now 2 weeks of consolidation as the market is finding its highs. We were looking for that market top to develop somewhere in this 1340 to 1380 area. At this stage, we're now actually at a critical moment. This 1290 1300 focal point that we drew on here is a sort of like a line in the sand. If we break below that early this week, down below this zone, we would find ourselves very quickly down in the 1260 1270 area on the downside. This here, while could create a bounce off of that level, would certainly begin to solidify that market correction. By the time we get down to this level, it would already be a 5% correction underway, and then we'd have to just make it down to about the 1220 to 1200 area on the downside to kind of complete that 10% market correction. Nonetheless, if this level doesn't break, then we actually will still be seeing the topping formation developing. We still at this point cannot rule out the possibility of double top retests or even head and shoulders patterns where the market even attempts to break to a higher high and then reverses out off of the zone and comes back down. So really at this stage, we're watching this pivot level at this 1290 1300. Below there, the window really opens up for the market correction to really get underway. If the support holds, then we're going to continue to see topping formations developing with retesting of previous resistance levels. Just to review our key market points, we have an intermediate bullish bias, and even though we don't want to turn bearish at this point, we do believe that the upside is very marginal, if not already complete, and therefore we're overdue for that correction. We continue to see momentum loss and a lack of market breadth, which supports that correction. We've been looking for that market top in that 1340 1380 area, and while we cannot rule out the possibility that we can retest those highs during the development of a topping formation, if we have already seen the high, then a break of this 1290 level will really get things underway down into that 1260 1270 area on the downside, where we can at that point conclude that the intermediate high is definitely in for the first part of the year. Next here I want to take a look at that NASDAQ, and when we take a look at the NASDAQ 100 on the futures, we were again looking for that market top to come up along this top side. We've completed the most minimum requirement of the upside target, but we, just like the S&P, we can't rule out the possibility of a retest of all those highs one more time. But if the S&P breaks here and the NASDAQ continues to consolidate below this 2300 area, we're going to find ourselves down at the 2230 2250 area relatively quickly. Next here I want to take a look at the US dollar index futures, and we saw a little bit of strength last week and it reversed quickly coming this morning. If the downtrend in the US dollar is still not complete, then we will probably see it finish off somewhere in the 74-76 area on the downside. In the bigger picture, we believe a major US dollar bottom will come in here, but it's certainly not looking like it's complete yet. So while there's further US dollar weakness, it could continue to support the commodities temporarily, and as well it could give a short-term base under the S&P 500 for that retest of the previous highs. In the bigger intermarket relationship picture that we are looking at, we do believe the US dollar will hit some sort of a bottom, which will sort of create that big asset class rotation in the bigger picture. So until the US dollar finds a bottom, we remain relatively neutral on a lot of different things. Next year, when we take a look at copper futures, you can see copper has at least found some sort of a short-term high in that 455, 465 area, and creating this kind of flagging formation lower. While we certainly believe that major tops in copper will come in here, our most optimistic upside forecast was only 480 to 500. So we believe that copper is topping out. But again, if that US dollar in any way breaks down here early, then we could see copper come back and retest 440, 450, 460 on the upside in the process of developing a market top. So really the way we want to look at it is that we believe major levels have been seen, but we can't rule out that they won't be retested on the upside before a much bigger picture copper correction really gets underway. Next year I want to take a look at gold futures, and gold continues to consolidate at the higher levels, prepared to want to potentially go higher. Again, so long as the US dollar weakness pertains, then we certainly could see gold continue on its quest for a little bit higher levels. If we have any technical breaks to new highs, we could be targeting 1480, 1520, and even 1560, 1580 on the upside of a really big gold push. Now those upside targets at the very high end are big measured move targets, but I really am only really targeting the 1460 to 1480 area sort of on the upside for the first push higher. Next year I want to take a look at the crude oil futures contracts, which have at least found some sort of a short-term high at the 105, 106 level. While we've seen some pretty aggressive profit taking as it worked its way back down to the 100 level, there is still nothing bearish about this price action. So long as all these consolidations on crude occur above the 96, 97 level, we will probably find some short-term lows and even swing back to the previous highs. We would need to see a break below 96 on the downside for us to really start considering that this was an intermediate high in oil. Finally, I want to take a look at the 30-year Treasury notes, and overall there was just an auction the other week that went very well at these levels. We do believe that the 30-year Treasury bonds are going to find a bottom somewhere down here if they haven't already. If there is still one more leg lower in Treasury bonds, we would measure it out down to about the 114, 117 area, but even in some of our services we're already starting to accumulate the 30-year Treasury bond. When the US dollar finally bottoms out and starts a rally, we should see a very healthy bounce higher in the 30-year Treasury notes. It doesn't make us very big picture bullish, the 30-year Treasury notes, but they certainly are oversold, and at some stage if this bottoming really develops, then any breaks above the 122 area on the upside would have us testing 126 on a retracing move. That was your Monday Futures Market Outlook. Thank you for joining me.